Good morning, everybody. Welcome to the Flow Show, Friday, the 16th of January. Here we are through another week, second week of the year already. Time flies when you're having fun, as they say. It's certainly ticking through pretty quickly. Morning, K-Man. How you doing?
Morning, Ryan. Morning, everybody. Yeah, doing fine, mate. Glad it's Friday. Yeah, as you say, second week of the year already. Get the Christmas tree out.
Yeah, it's soon be Christmas, and we have to do all that over again. Could do a 2-week holiday already. Bit of sun would go down nicely right now. Right, this is the final weekend for our sale. Runs out the 18th at midnight. So this is your last chance to get in 30% off our trader funding program assessment or instant funding accounts. Use code New Year 2026. And I've got to give you guys the answer to my quiz. Who wrote the song 2 Minutes to Midnight? It was called Iron Maiden. So I've got to do that at the end of yesterday's show. I had a little listen to that after I finished here. So yeah, that got me rocking anyway. Right, let's get cracking. Bit of news out of Japan. Well, one thing I don't know if you noticed it, Kay, but I completely missed it. I didn't know that the Bank of Japan was not on the list of those central banks who did that joint statement. Apparently, the reason being is that they weren't sure whether to sign it. They consulted the government, and they were unsure because of their relationship with the US. Okay, it's nothing really significant, but I didn't notice they weren't on that letter.
Why? No, it didn't raise any flags or so. But now you're saying, yeah, they weren't on there. Maybe they consulted with the New Zealand government. Who knows? Yeah. Well, moving on, mate. And really, yeah, as you say, I don't think it's of any significance, but it's. Those countries, and as traders, it's always nice just to know and to notice and to keep it in the back of our minds. Those countries who are not afraid to go head to head with the US or criticize, and then there's other countries who like to be still sailing on the side of aside the US government, and likely Japan is one of those because they need them, right?
Yeah, they've got a good relationship, so they don't want to make any waves.
Yeah.
So it's an interesting psychological thing and political thing to look at. Anyway, moving on. Finance Minister Katayama has been out waffling again, saying she's prepared to take, or they're prepared to take bold action and concerned about yen weakness. She's been insinuating, without actually saying it directly, that the agreement with the US Treasury Chief includes intervention. Now, a lot of people, press are spinning that as there will be joint intervention if it happens. Yes, it is a possibility, but she hasn't yet said if we intervene, we will be doing it with the US. But it's being noted, and she's using that in her jawboning, that is a possibility. That's still got the market a little nervous. We're seeing dollar yen just having a nibble under 158 earlier, trading around 158.10 at the moment. But I think this is a situation, Kate, as it always is. You know, you've got to back up the bark with some bite, or the market's going to punish you for it.
Yep. For the moment, we're still in that scenario where we're likely seeing a few people just lightening up some positions. I guess that's what we are seeing now. Has to be said that Japanese yields stay high enough as well, probably to keep the yen weakness in check for now. We'll see what happens after the weekend. I guess. I don't know if Monday morning would be an ideal time for them to intervene, although I still think that they would. The most likely to me scenario would be in the US session, but yeah, we will see, mate. It wouldn't be a bad idea to intervene today for our puts, right?
Yeah, I was just about to say, could do with a little intervention in the next couple of hours
Yeah.
to make some money, but these are low risk plays.
The-
I might stick on another one for next week, expiring next
yeah.
week, just a cheap one.
Mine
Um,
runs until Tuesday, so I still got a bit of time. But you know what? It's also a fact that and the yen index is by no means back to where it should be. It's still at horribly low levels, but it's rare that they intervene when the market is already kind of taking the directions. The yen crosses have thought just that little bit. Dollar yen hasn't made any fresh advance, although still being very high. We're still at levels where they can easily intervene, but historically at least they don't have the habit of starting to intervene when things quiet down. So I don't know with this administration how they will do it, but yeah, it's cooling down a little bit on the yen pairs.
yeah, yeah. But as I said, it's jawboning will only get you so far, and then the market will go, well, you've been saying this for the last 2 weeks and you haven't done anything, so we're going to start pushing your
Mm,
buttons again. So yeah, it definitely seems to be a bit more, as we've been saying, caution, nervousness now. But as I say, that's got an expiry on it, and nothing happens, then we'll probably see the yen weakening again. Yeah, that yen index a little bit worse off by 6 pips, 73.72 from 73.78. So no big change there. Election stuff is starting to dribble through. This new coalition between the CDP and Comito has now formed into a new party called the Centrist Reform Alliance, which forever now will be known as CRA. That's happening, so movement is being made. One of the opposition leaders, Noda, said that they will focus on fiscal discipline and says that weak yen impacts the daily lives of ordinary people. So it looks like the currency is going to be a bit of a political football coming into this election. Which, again, do you think if that's the case, if the yen is going to be an election commitment pledge football, whatever you want to call it, might that bring Katayama out to do something in it ahead of the election?
to uh, to prevent them from being able to use that argument. That would be a political step. I don't know if
Yeah,
if they would go as far. But what it may do is perhaps just naturally putting a little bit of less downside pressure on the yen during the election period. We never know what Takaichi will come up with. They did already say that all that spending wouldn't have too much of an effect. But that I think is just a political chit chat. It will have an effect. But yeah, it could just have like this dampening effect of what's going on now. But I'm still in the camp where if nothing happens on the intervention side, the market is not going to let this bone go too easily. That new party, when you read it out in the short form, the CRA. I mean, it's and there's a bit of reform in there as well. It all makes think a little bit about CRA, IRA, and then reform and Farage. I don't know. I mean, did they take lessons from the English peninsula? Oh,
yeah.
insula?
Could have done. Well, if they had S and H on the end of it, it would have been a crash party. So they're not far off. But anyway,
Yeah.
the next few days and weeks are going to be full of election stuff from Japan. So we'll keep an eye on that if it has any market impact. Right, switching from them over to the Riksbank. Riksbank Spania says that inflation has moved closer to our target and the real economy has started to recover. Our assessment, the policy rate of 1.75 will continue to support economic activity and contribute to attaining an inflation rate close to target in the medium term. So no any thoughts there about changing their rate anytime soon. PM Sanchez over in Spain is the next to decide to create a sovereign wealth fund. to extend the impulse of Europe's next generation funds beyond 2026 is the sells point from that. Apparently they're going to nick 10.5 billion from the EU and then raise another 120 billion in private debt. France hasn't had a new PM for a while, but that may be about to change because the Premier's office says they are unable to pass a budget via a vote. So they're going to be making budget proposals today. So keep an eye on that one. That saga still going on and on and on and on and on. ECB's Lane says the current rate level sets a baseline for the next several years, says there is no near-term interest rate debate. Looking into some data that we got yesterday, not an awful lot out. We got initial jobless claims, which came in a bit better, dipping under the 200,000 mark once again to 198. Continued claims improving a bit as well, 1.884 million. We also had Philly Fed and Empire putting in some good numbers there. As you can see, the Empire, where is it? Up there somewhere. Where is it? I lost it. There we go, 7.7. This one's been a bit all over the place recently. The Philly Fed number coming in at 12.6, turning around a negative. In the details, they were all marginally positive. Prices paid, though, came down a bit to 46.9. CapEx improved a touch there, investment on that. Also, employment was lower, though, 9.7 versus 13 previously. Fed's Goolsbeast says he is not surprised by the low claims data. He says the data points to stability in the jobs market. Says there is still strength in jobs and overall growth is good and rates can still go down a fair amount, but we need firm evidence of an inflation retreat. That's a bit of a repeat of his prior line. Fed's Bostic says the labour market is not that tight today, but it's not loose. Fed's Bar, he's stepped up a bit of rhetoric in regards to Powell and this Department of Justice thing, saying the probe is an assault on the independence of the Fed. Fed's Schmid says inflation is too hot and there's no room for complacency. He prefers to keep monetary policy restrictive. Cutting rates could worsen inflation without helping employment much. Sees full employment likely between 3.5 and 4.5%. Fed's Barkin says today's economy has two engines, AI and the wealthy, and he might not be far wrong from that. Case in point being that the US and Taiwan have agreed a deal for investment to the tune of 250 billion in chips, which helped lift TMC yesterday, or TSC, TMS, whatever it's called. Zelensky says that the Ukraine has never been and will never be an obstacle to peace in response to Trump's comment that he's holding up the peace deal. And probably the best news of the year so far, Kay, Trump finally got his Nobel Peace Prize, although it was given to him by the actual Peace Prize winner, who is the Venezuelan opposition leader, Maria Corina Machado. She gave it over to him, much to his delight. So he's finally got it, Kay.
He's got it, man. He's got it. He's on top of the world. Yeah, and now I don't know. He may actually put it somewhere in the ballroom, yeah, for everybody to see when he will invite his buddies.
No, I reckon that's going on the golden toilet, mate. So we can look at it every day. Yeah. That's where that's going. So yeah, that
the flush button.
He's racking them up. He's got the Nobel Peace Prize. He's got the inaugural FIFA World Cup Peace Prize. Oh, I mean, there's no stopping this guy at the moment.
No, and he's increasing his rusty gold vehicle park as well.
Yeah, he's going for it. He's really going for it. Right, anything else, mate?
No, but something that may have instigated the move that we saw yesterday, although I still think that it's kind of a planned fixing also move. But yesterday, Ebrard, the Mexican economy minister, came up saying that they are already working on the revision of the USMCA, which came a little bit as a surprise because most of us were or have been reading, etc., that it should be something for the second half of this year. And he said that they were already working on it to finish it and he called it a kind of a deadline, the 1st of July. So that was a bit of an interesting one yesterday as well when he came up with that, because that means that we could get some comments on that before actually we thought that they would really sit around the table and talk about it.
Yeah, absolutely. Stephen was just joking that the next prize for Trump is the McDonald's favourite customer award. Well, he already won Employee of the Month when he did his little stint in that drive-through. So, yeah, more awards. He's cleaned them up. He is going to need a bigger ballroom, I think, to hang all these in.
And what is it? Diet Coke Ambassador could be the next one.
Yeah. Oh, dearie me, dearie me. I'm glad it's Friday. Right, we've not got an awful lot coming up today on the data front. We've got industrial production for December, so a little bit to get stuck into there. But apart from that and some NAHB housing data, that's about it. As far as the data goes, we do have a couple of Fed heads speaking. I don't even know, when is the next round of central banks? Aren't they going into blackout soon, all these clowns?
They should actually. When the Fed is 28th, right? Let me quickly have a look, and my sheet is not very clear. 28th. Bank of Canada 28th, Fed for 28th, Norges Bank next week, Bank of Japan next week, Riksbank the week after. That's what I'm seeing. So 18th, we are the 16th, so they will go into blackout on Sunday, the Fed, right?
Saturday, I think they're going to blackout on the Saturday. So yeah,
okay.
Well, either way, is a winner. It means they're not shut up for a while.
Yeah.
It's the best part of all these central bank meetings when they all shut up for 2 weeks. Okay, that's that. So no more news. Not a lot of data coming out. So let's have a look at what's going on. Right, dollar yen, as we're here, we've been ranging pretty nicely between a couple of levels. This bit of resistance up here into 158.90 and this support down here 158, 15, 20, whatever you want to call it. It looks like we might be trying to have a little break under, but it's not clear yet. We've had these little moments. They haven't held. Now we just got a bit of indecision. Can we hold here in the figure? We'll have to wait and see. But I think if we are looking like we are holding this line as resistance or anywhere between there and 20s, we could be heading a bit lower. But it all depends what the US want to do with the dollar. A couple of others, we look like we were potentially getting a bit of a break in euro dollar. Let's come out a little bit. We broke through the fib yesterday. We broke through 116. We got down to the good old 115.90s. You always got to look 10 pips either side when you get these big figure moves. We held that. We just got back into 116s. The bounce isn't looking anything hot at the moment. We're just about getting up to sort of these prior lows here. So very tight ranges still. What have we got? 16 pip range so far today. Not very good at all. But at least it stopped going down, which is one thing. But the dollar still looking like it's got a little bit of head of steam on it. Cable did similar. We had a break. And I said yesterday on the face show, watch out. You could look at longs into 134, but be careful if we're breaking 133.90. We did that. We looked like we were confirming a break, and then we got back above, and now we're back into 134 again. So this is potentially just looking like a little bit of a fake out at the moment. I think it's part of the course, Kay. We're seeing this. Yes, we're going to get these little breaks, stop runs, extensions, but if it doesn't confirm and if it doesn't hold, then we go back in the box again.
Yeah, and that's low volume environment for you. too many people on both sides of ranges, and what is looking like a breakout yesterday below 133.90 stopped on the. It actually stopped on the 38.2 of the latest rally. That 135, yeah, that one. If you put a 38.2 on there, that's where it stopped yesterday. Yeah, as I said, that's what you get with when the vols are so low. Looks like it's breaking, and then it stops because there's too many people on either side. And today, if you look at how it's going to go in euro dollar, it's there's a lot of expiries in the neighborhood. I don't know what's going to take it out of this range. Yeah, that's about what we can say, right? About whatever is going on right now.
Yeah, we got a big
Right.
chunk of expiries. They're a bit. I mean, we got quite a bit here around this, 116
Yeah,
figure.
exactly.
But all the way up the ladder, there's some decent expiries, and that can almost have a nulling effect because if there was one big fat one, right in the middle and not much either side, then maybe that could have some impact. But when you get a lot all the way up the ladder, where's it going to magnet to is the question. If it's going
Well,
to be,
that's the thing, and I think that's the reason why we don't move.
yeah,
Because
so
there's interest on both sides of the spectrum. That's what yeah, I usually don't even think about you, especially in euro dollar. I mean, 2-3 billion euros. People always make something out of it, but it's really nothing in the big scheme of markets. I usually completely ignore whatever is below 2-3 billion euros. But there's just so many around right now that I think is just going to keep everything in the range, and this just going to be too much interest on either side.
yeah, exactly. As I say, it's if there was no expiries, still be in a tight range, and then when there's lots of expiries, it still keeps us in a range
Mm.
because you don't know who's doing what in what option. But yeah, I was surprised yesterday. Yesterday, absolutely dead in terms of expiries, and a bit busy today on a Friday. But yeah, there's a few bits and pieces around, and obviously you can throw my mouse across the table. You can get this on the Forex Analytics platform. Update this every day, as well as some FX orders there as well. So that's another reason to jump on our platform. Anyway, back to the pricing. So the one thing I would say, and I keep saying this, when you're in low environment or low volatility environment markets, okay, you can either do two things. You can moan about it, or you can do something about it regarding your trading. There's no point getting into a trade and thinking, yeah, I'm going to buy euro dollar here and I'm going to profit at 119. You can't even get into 116.20. So bring your expectations down for where you can make profit. It's easier perhaps to move into a different way of thinking. Yes, if you're going to buy at 116, 115, 19, fine. You know that volatility is low. Be taking some profit for 10, 15, 20 pips. Don't get over eager and think, oh, I'm going to take profit, my first profit after 50 pips. You'd be lucky to get 30 pips out of it the way this is going. But also let the price action tell you where the levels are. Okay, yes, you had the 116 figure. Yes, you had the 61.8, but now we've got 115.90 confirmed. So, if you want to draw a line off of there, fine. It gives you a level of interest to look at, potential level to trade. Dollar CAD's another one, been doing absolutely nothing, but it's quite clear it's been holding here as support. And now we've had confirmation that this high at 139.20s has got something about it. So now you've got a range to play. Let's just do it. Stick a epoxy line in there. Okay, now you've got something to play in. You've got 138.60, 17. You've got 139.20. So if you want to play around in it, fine. Trade the edges. Don't faff around in the middle here where nothing's going on. Be careful if you get breaks. Is the break going to confirm? like cable, looked like it was going to confirm, might encourage shorts. But you don't need to be wrong by much. If this level breaks and you go short, if we're back up 10, 15 pips above it, the trade's wrong. Okay, so you get out. But if you're right, you've waited for this level, and then you might get something more. You might get, 20, 30, 40 pips out of it. But now you've got a range, and you've got a decent range that's, 50, 60, 70 pips to play in. Have patience, respect your levels, because when you get low volatility, you'll find these sort of moves happen more and more and more. And you think, oh, it's going to go now. It's going to go to 139.30s. Well, it hasn't. Banged its head, and it's come all the way back down again. Okay, so change your expectations when you're in low vol markets, but don't moan about it. I mean, I know we moan about it in the chat room all the time, but we still change our trading, Kay. We still adapt to the conditions we have in front of us, even if we're moaning as well.
Well, absolutely. I mean, moaning is part of our job, right? Really, it comes with the job. It's a good moan up, relaxes the nerves a bit. Yeah, what I would say is like don't tire your account. It's too easy to get dragged into stuff. Oh, we are it's breaking down, but we've been warning enough about the low vol environment, so people should not put their hopes too high. Not for the time being. It will break eventually. It's going. That's just the nature of market. But in between, don't tire your account unnecessary, because taking non-stop 10, 15 pips stop because you go for the break and it doesn't happen, that's equally demoralizing than having a big one big move against you. So don't tire your account too much. Just be patient. Things will come. And if you have a position and you think it's the right position, just ignore everything that's happening right now, and those small ranges, etc. Just let them go. They will resolve themselves sooner or later. But if you have the right fundamentals for those doing a bit more medium term, just sit back, watch the game, have a beer, and it would all come to fruition sooner or later. Yeah.
Yeah, absolutely. And this goes to you, Ali, because you trade this way. You trade quite tight. You trade on smaller levels. These types of markets are not conducive for trading like that. Okay, you need to. Again, this is a lesson I try and teach people. You've got lines on your chart. Okay, score them. Okay, I've got loads of lines on the chart. They all mean different things, but they mean something to me. But just look in this range. Okay, so we've got this old 50 retracement. It's a bit of a pivot point. I've got this level here, 139, the figure. Okay, it doesn't mean I'm going to trade it. I look at all my lines. I think, right, out of all these lines and levels, which ones will I have confidence in? I haven't got confidence in this one at 139. I've got no confidence in trading 138.93. I've got confidence in this one, and I've got growing confidence in this one. Okay, score your lines. Be picky and think, right, that's the one I really want to trade. Because as Kay said, you blow 10, 15 pips, 5, 6, 7 trades, you're down 70, 80 pips. You've got to hit a big one just to get all that back. Okay, so be more picky, score your levels, and try and get the greatest conviction levels that you can. And if you can't, then you sit on your hands and you wait for the price to go to your levels and make the decision at the time. Right, okay, I'm going to bounce it over to you. I think Mike wants a look at old Aussie dollar.
Aussie dollar. Where are you? Oh, there you are. Share screen. Here we are. Mike, okay, first of all, I agree on the direction, sort of. But the problem is we're stuck in between 66.70 and 67.25.30, okay? I still think Aussie is doing all right. People have different views on that, but really, again, going long at 67, the figure, you're right smack bang in the middle of the ballpark, really. I'm I'm a little long Aussie Kiwi. I've been long Aussie, let them go, and then but for the time being, I don't have any. I still think the better chance right now is for a resumption to the top side, but on the other side, the dollar isn't doing too bad either. So is it Aussie dollar that we want right now? But if you're really looking at the Aussie dollar, but if you look at it really, I mean, there's no other way of looking at it. This is 60, 66, 60, 67 and a quarter. So what are you going to do in the middle? That's what we just spoke about. Where's your stop? That's the most important thing for you to decide. And for me, that stop cannot be above 66.60. And if it goes below 66.60, actually it may accelerate because it held so well right in front up to now, right? The whole so I mean, this is the 31st of December, and since then we have been holding all those dips, which is excuse me, which is encouraging. Especially looking at this little move here, it does look encouraging. But 67, the figure is right in the middle. So yeah, I'm not going to. Yeah, exactly. I mean that's where the stop should be, 66 and a half. And you know what? I mean, if it really goes below there, why not do a stop and reverse? You know, to try and get on the bandwagon short. When I have a fundamental view on a currency, I don't like to do stop and reverses because it goes a little bit against my fundamental view, but if you do it on a purely technical basis, you can try, and then the stop is back above 66.60, which is pretty easy then as well. But I leave that over to each and everyone's own trading and opinion. Yesterday I was looking at this Aussie Kiwi actually. I'm just wondering, and of course it went above, and now we are back in into this wedge. Is this not starting to make a kind of wedge, which is going to be a bullish wedge and take us all the way up to close to 119? I it's a possibility. I'm small, very small positioned that direction, and I will leave the boat if it goes under 116. But it does seem like it could be a building in a bit of a pause and then continue its way higher. It's not purely based on, but just don't forget that Aussie has a 1.5% advantage over the Kiwi as well on interest rates. Okay, so that's that for that little bit. Um, we have to look at dollar mix, of course. Yesterday, I'm going from the longer into the shorter end. Um, Longer term or more medium term, I would say, look at this whole zone here. And Ryan's 1740 is somewhere in the middle of that zone. 17, okay, this is an extension at 47, but mine is around 1745, all the way down to 1730s. There's a bit of a congestion zone there. Okay, it's also early 2024, we also traded back in that zone as well. And it's also around the lower end is just around the 78.6 of the whole 2024 rally. Okay, so there is stuff to do in 1747s. The funny thing is that it happened. We had this tiny little move higher when the dollar was doing well across the board. Then this that Ebrard comment came out about them already working on the USMCA, and at first the market didn't react, but then 5-10 minutes later, all of a sudden we started to go down. But the real acceleration came in the fixing hour. So I think that there's been a quite a big order going through, potentially a few stops as people were hinting at in the market under, well, since we couldn't make it back above 84, 87, a few stops being triggered. But this looks like a pretty decent order going through. So looking forward to what's going to happen today. Those kind of orders, is it just a one-off? some remittance or something. Was it remittance day? It's possible as well. But just watch out what's happening today, I would say. And then especially, sorry, in our afternoon, in that hour, in the fixing hour, which is from, let's say, from 3 to 4 p.m. London time, I would pay close attention to what's happening in dollar mix, because if you see the same thing again, we could actually, because of the magnitude of this yesterday's move, we could actually then start to run into that zone 37.47 on the dollar mix. So so be a bit careful this afternoon what's going on with the Mexican peso, because it could be just another one this afternoon. Okay, just it could be. All right. Obviously, if we start to move now, your new resistance is there 84.87, and we will see what happens if ever the dollar recovers and we are getting back up to that level. Okay, just it was a very interesting watch yesterday. And then just the traditional ones. Gold is hanging around 4,600. The question is now, what does the market want to be? How does it want to go into the weekend? That's really the question on most of the metals right now. Maybe silver is still a bit of a different game, different forces playing in silver compared to some of the other metals. But the question here is how does the market want to go into the weekend? I would say maybe as little position as possible for the real short termers, because yes, there is this very fragile optimism that the US may not go into Iran, but again, is it not a tactical play just to get the citizens out of there, and then it's bingo after all? I mean, look at last weekend Venezuela. Okay, so we can't rule out anything. So maybe the market is just going to ping pong between 45.80, let's say, and 46 at a quarter, 46.35, 40, until the week is over. That is how I would look at it. There's no real reason to take it a lot lower, but we never know about the positioning. Okay, so I think it's rather going to be if you want to trade it, smash and grab, but I'm probably going to stay out of gold on the day and then see what happens on Monday. And again, if you have positions over the weekend, just be mindful of what happened on Venezuela, okay? Because we could open with a gap on Monday. Silver is still rather better supported, although more volatile, but rather better supported than gold, because there are still those different forces at play. We've been speaking enough about geopolitics and supplies, etc., etc., etc. But this is still better bid, I would say, and well above critical support levels as well. People have asked about gold, and I'm about the oils, and I'm just going to have a look at again what happened in Brent. And there is probably some support around here. I haven't put the fibs on there, but there seems to be a bit of support. Mark also mentioned that 63.40 zone on Brent. We are again above 64. Again there. Watch what's going to happen with Iran over the weekend. But just know about this level here. Just going to repeat this level 67.30 in Brent. If that goes, we could be trading very close to $70 quite rapidly. But again, what we saw in the past, we could be in for a little bit of a retest here, and then starting to shy away. So I think this is one going to be very interesting once the weekend is over as well. And Ryan, I think we took enough time. Back over to you, mate.
Thank you very much, mate. Great stuff as always, and thank you everybody for coming to the Flow Show this week. We hope you get you entertained and up to speed on what's going on in markets. Don't forget, if you do like what we're doing on here, don't forget to give the old Flow Show tweet a retweet. Spread the word. More people in here, the merrier. Other than that, have a wonderful rest of your day. Have a great weekend, and we will see you all on Monday.